All right, so before we start, I want to throw up a quick poll. Everyone should be seeing the poll. It just asks what's your experience level as a trader right now, just to give me an idea of the audience here today. We've got almost 300 people registered for the webinar, so I just want to get an idea of where we stand in terms of experience. So take a second and vote. So it looks like pretty even split between beginner and intermediate. Great. Well, let's get going. So many of you probably know that we've been running our BMT Best of Trading. It's an annual event where we encourage everyone to vote for their favorite trading products and services. So if you haven't voted already, I encourage you to do that. You can go to BMT and click on the community in the nav bar and then click on Best of Trading. Today is the last day to vote, so I would appreciate it if you would do that. The voting will close at the end of today, and then I'll post the results in the forum in the coming days. Okay, so here is today's agenda. So I'm going to try to give a brief overview of what I'm going to do with the entire series. And of course, today the focus is going to be just on the instruments and the brokers. Try to talk a little bit about equities, a little bit about Forex and futures. We want to try to address the question of which instrument is best and why. I want to talk a little bit about risk. I get a lot of people asking about time of day. You know, if you have a day job or you have limited time, you know, can you trade a certain instrument at a certain time of day? So we'll try to address that. Again, we'll talk about brokers, choosing a broker and the best one depending on what you're trading for equities, Forex, futures. Your location versus your broker's location. That's important for any of you that are outside of the United States. It's important to pick a platform and understand where the data is coming from or the quality of data from your broker. Make sure everything's compatible with each other. So we're going to talk about that. A lot of people want to know how much money does it take to get started, so I'll try to address that. And also try to give you an idea of how to prioritize, you know, which brokers are best based on reliability, reputation, and support. And there will be an open Q&A at the end. If you guys have questions along the way, go ahead and type them into the box as we go and try to keep them on topic as much as possible for whatever I'm discussing right now, and I'll try to answer them. If I skip your question, then just ask it again at the very end, and I'll do my best to answer everybody's questions. All right, so part one today, instruments and brokers. Part two, at a future date, we'll be focusing on trading platforms and trying to compare all the most popular trading platforms to one another. Part three, we'll be focusing on how to develop your own trading style, your own methodology. Part four is going to focus on risk management and trade management. Part five will focus on setting goals and the best way to measure, which, by the way, is not net profit. And part six will be about indicators and signal generators and automation, algorithmic trading. So that's just a brief overview. Those may change a little bit as we go along. Okay, so I covered this kind of already, but these are the main bullet points that we're going to talk about today. Andrew wants to know if psychology will be included on any of these webinars. You know, psychology is a huge part. So I'm not really sure if it's really, I have to think about that. Is it really a topic for this series? Because really it deserves its own entire series. And we do have actually several upcoming webinars that focus on psychology that I'm not presenting myself, but yeah, I have a lot to say about it. So I'll consider adding psychology as webinar number 7, or it may just be its own separate series. Okay, so everybody has read that list, hopefully. All right, so let's get started with the instruments. So these are the main types. There are others, but these are the main types of instruments that most people trade: equities and ETFs, options, contract for difference, Forex, and futures. So if you are an equities trader, there's a couple things that may apply to you. First is the pattern day trader rule, which came about, I think, around 2001, I think it was, which basically the powers that be decided that in order for you to trade multiple times in and out of a stock on a daily basis, that you needed to have $25,000 in your account, and it had to be a margin account, not a cash account. Okay, so if you're swing trading and you're holding, let's say that you buy Google and you're long Google and you hold it overnight. It doesn't matter if it's one night or if it's 20 nights. If you hold it overnight and then you sell it some point in the future, that's a swing trade, and the pattern day trader rule will not apply to you. But let's say that you want to trade Google intraday. You buy in the morning and you sell in the afternoon before the close. That's an intraday trade. It's day trading. And if you do that, I think you're allowed to do it like 2 or 3 times a week or something like that. And then your account will get flagged as a pattern day trader. And eventually your broker will actually disable your account if you do it too much. The way to get around that is to put $25,000 in the account. Equities have the advantage of being a very highly regulated market, so it's very safe. I'm going to talk more about the account sizing and how to choose brokers for equities a little bit later. So, why would you choose equities instead of Forex or futures? I'm going to just briefly touch on that right now, and then I think it'll become more apparent later which one fits your personality. But a lot really has to do with, well, first of all, if you have any prior experience with equities, then it's a pretty good place to start. Not necessarily so good to jump straight into futures if you don't already have a good, solid understanding and really a profitable past with equities. So equities are, because of the share size, you can really be very granular with your position sizing. What that means is that you can really control risk very well, and you can limit risk very well. So, of course, there's 1,000,001 stocks to choose from, so there's a lot of variety to keep you, interested. There's all kinds of ways that you can compare individual stocks to their sector, and then the sector to the index, like the S&P 500, and see how they're performing. So you can come up with a lot of different strategies for equities. So it's a very wide array of choices when it comes to trading equities. So, and you can actually trade some of the ETFs. If I go to the next slide, some of the ETFs really simulate indexes. Like you could trade on the futures market, you could actually trade the ETFs on the equity side and simulate what you're doing on futures with a smaller position size. I'll talk about that more in a second. So here's a list of the most popular ETFs. I apologize if it's a little bit hard to see, but you can just Google that exact thing, most popular ETFs, and probably get this list. I think I pulled this off of Yahoo. But you can see like the spider, SPY at the top. That's the ETF version of the S&P 500, the ES on the futures market. There's lots of different symbols that you can choose from with ETFs that can simulate, the NASDAQ, the Russell, all kinds of different sectors. So there are really a lot of things to choose from, a lot of variety to keep you interested. And again, position size is key. You can buy 100 shares of something and really limit your risk. Okay, so let's briefly discuss Forex. Forex is basically the foreign exchange of currency. A lot of people immediately associate Forex with something very, 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 very bad. It's got kind of a really bad stigmata or a really bad reputation surrounding it. The question is it deserved? Well, like most things in trading, there is no black or white answer. There is no, concrete, yes, it's deserved, no, it's not deserved. There's a lot of gray when it comes to trading, and basically what that means is that, yes, there are some Forex brokers, some Forex dealers that definitely deserve a bad reputation, and then there are also some very good Forex brokers that don't deserve to be labeled this way. And I really am an advocate of choosing Forex in some situations instead of futures for beginners, because you can really granularly control your risk. And that is the most important thing as a beginner. Most beginners say, oh, how much money can I make? That's the wrong question. The right question is, how much money can I lose? So with Forex, and we'll talk more in detail about the risk in a minute, but with Forex, you can really control that. So some basics on Forex. The currencies are traded in pairs. You'll see symbols like the Euro/USD. So the first part of that is the base currency, and then the second part of that is the quote currency. When guys like me talk about Forex, we're talking about spot Forex, which is just a part of the entire Forex market. It's the part where the retail guys trade like us. It's huge. It's absolutely huge. It's probably about 20 times bigger than the New York Stock Exchange volume on a daily basis. So let's give a couple examples if you're not real familiar with how Forex works. So let's say you're talking about the euro dollar. If the euro is trading at 120s, which we're approaching that level now, then it means 1 euro is going to buy you about $1.2. So the dollar is weaker against the euro. So let's say that you wanted to get short the euro. Basically, that means you're going to short the base currency, that's the euro, and it really means that you're long the quote currency, which is the dollar in that case. So for example, probably wouldn't be a very good idea to be both short the euro and short the actual dollar, like in futures, DX, the dollar. You wouldn't want to do that because that wouldn't be a very good hedge in most cases. Forex in general is very uncentralized. It's very unregulated. It's more or less each bank for themselves. This definitely can cause some problems and some concerns. Basically what it means is, there's all kinds of different Forex banks out there. Some of the bigger ones that you may have heard of are FXCM, MB Trading, Oanda, Interactive Brokers. There's many. Those are some of the best ones. I won't name the worst ones. Each bank is really operating their own ECN, their own exchange. And what it means is that if you're trading with MB Trading, then what you're seeing on your screen as a quote for the current price of the euro may not be exactly what I see on my screen if I'm not using MB Trading, if I'm using something else. Because everybody's quote is going to be a little bit different because they literally control it. Now, it's not going to be wildly different because that would introduce arbitrage, and then there's going to be all kinds of bots and things out there that would be buying or selling through different brokers to try to profit from that. But they will vary a little bit, and there's a big difference on how each bank operates. So we'll get into that in just a minute. Okay, I've got just a couple of questions. After MF Global, Andrew wants to know, after MF Global, would you consider SIPC as an advantage trading equities. You know, I don't want to say too much about what to do with your money in terms of, you know, is this a sound investment? Is this not a sound investment? All I can say is that, you know, well, SIPC is obviously very nice to have. And then the whole MF Global scandal, you know, with the future side, if you're not familiar, people have lost some money. They're trying to recover some of it every day. I think recently it was announced they have about half of the missing money, which is like 1.2 billion was missing, and they've recovered about half of that so far. So, you know, if your account is still in limbo as one of the $600 million that's, quote, missing, then obviously you have a very big concern and very little trust when it comes to, you know, the futures market. So I encourage you to do your own research. You can always start threads in the forum. Actually, there are threads already, a lot of threads already on MF Global and what to do to try to protect your money. And it's really better to read those. Ray's asking, what is the SIPC? Stands for Securities Investor Protection Corporation, I think. It's just basically insurance. Okay, here's the majors. The majors in Forex basically means the major pairs that are traded. We got the Euro, the Yen, the Cable, the Aussie, the Swissy, the Loonie, and the Kiwi. Okay, traders are always creative at coming up with some names. And you can see based on volume which ones have the most traded volume. Okay, so here's the question. Why would I trade Forex instead of futures? I'm going to pause for a second and invite you to give me your answer. Why do you think that you should trade Forex instead of futures? And then I'll give you my opinion in just a minute. Okay, Gordo's saying less risk. Kaylin's saying it's cheaper. Mike says position sizing. Dutchie says smaller amounts, smaller lot sizes. Raymond says lower account size. Jeremy says lower risk, micro, mini, standard lots. Dale says liquidity. Okay, Hardy says he would rather trade futures because of the regulation. Fernando also says futures are safer because of regulation. Derek says Forex is very liquid. Tracy says the commissions in Forex are cheaper. Colin says RD says the leverage is higher in Forex. Okay. So I agree with actually most of those things. And I'm going to talk more about those types of things in the broker section of the webinar here in a minute. But basically all those things are true. So, you know, nothing in life, or let's just say very little in life, is actually free, right? So there's always going to be a trade-off with futures. You do get a very regulated market. It's very safe, but you know, it's more expensive to start. You're paying more in commission. With Forex, it's unregulated. It's every man for itself. You really need to spend a lot of time making sure that you've chosen a very reputable Forex bank or dealer or broker to deal with. But you get the benefit of being able to start with less money. You get the benefit of lower commissions. But again, nothing's free, so there are typically higher spreads with Forex than there are with futures. That means that for every trade that you initiate, you're essentially paying a penalty because the spread is more. So maybe the tick, or maybe the spread is an extra tick. So, depending on what size you're trading, that could cost you, anywhere from 10 cents to $10 every time you initiate a trade. Or actually, it's twice, once when you buy and once when you sell. So if you got a spread that you have to deal with on every transaction, then, just because the commissions are a lot cheaper, or in some cases, Forex brokers don't even charge a commission. They say it's free, but again, you're really paying it in spread. So we'll talk about that more once we get to the broker section of Forex. All right, so let's talk about futures. So for sure, without a doubt, the majority of people on Big Mike Trading are trading futures. I really think that's because that when I started the forum 2.5 years ago, I was trading futures, and my friends that joined the forum with me, they were trading futures, and then they brought more people in that were trading futures, and and that's what's happened. So I like futures, don't get me wrong, but I do still think that in some cases Forex may be better for some people. So I don't want you to just automatically look to your left and look to your right and see everybody trading futures and think that that is the best for you, because it may be and it may not be. Hopefully by the end of this webinar, you'll be able to decide that for yourself. All right, so with futures, there are a lot of different exchanges. The most popular ones are the CME, which is the Chicago Mercantile Exchange, the NYSE Euronext, Tokyo, London, that's the LSE. There's a lot more all around the globe. It's a little bit confusing when you look at these instruments. Again, we're still talking about instruments in this point in the webinar. So the way that they're quoted is they have a code that varies from month to month. So like January, the code is F. March, the code is H. December, the code is Z. Okay. So the symbol for the S&P 500 is, excuse me, is ES. Okay. Yeah, it's probably stands for E-mini S&P. Okay. So ES, and then you take your month code. So let's say for March, that would be H. And then you take your year code. So for March 2012, that would be ESH12. Now this does vary a little bit from broker to broker, but for the most part, this is a standard format. You will need to, talk to your broker or look at your platform to make sure, what the symbol mapping is in your particular case. But for the most part, this is pretty standard. Give me 1 second. I need to get some water. Okay. Tim wants to know if I can talk more about the differences with regards to Forex between direct market access as opposed to trading or settling directly with your broker. So backing up a second to Forex, I'll try to answer that real quick. The idea with direct market access is that there is no other, there's no middleman. You're getting quotes directly from the banks, or like in some cases what happens is you'll get a Forex broker that has agreements or partnerships with a lot of different Forex banks. So they have partnerships with 5 different banks. Okay. So, and you want to trade the euro. So direct market access basically means that they're getting these quotes directly from each of those 5 banks, and they will take whoever has the best bid and the best ask, okay, the best price, and they will show those to you, and they won't do anything to that data. They're not modifying or marking up or changing or altering. They're not delaying. They're not doing anything to that information. They're just giving it to you directly. Whereas some brokers don't do it that way. Some of them, run their own ECN, their own exchange, and they basically can show you whatever price they want. There's been some threads in the past where you can find some plugins to some popular Forex trading software on the broker side, not for a client, but for the broker, where you could literally manipulate what the client sees, and it's basically for running their stops. So that's what has given Forex a bad name. And again, you really want to be careful when choosing your broker, do a lot of research, but they don't all deserve it. Some of them do, but not all of them deserve to be categorized in the same way. Okay, so we can talk more about that in the broker section. Okay, here are some, let's continue back to futures. Here are some of the advantages for futures. There are tax advantages. I'm not an accountant, but you can just Google futures tax advantages and probably get started with some information. There's also a thread on BMT called the tax thread, and it's been discussed in there. Again, it's a highly regulated market, and basically that equals safety. There are multiple watchdogs, which you can see there. Again, safety. Generally speaking, there are no spreads. There are some instruments that do have small spreads in futures, but for the most part, most of the time, there are no spreads. That means that there's no gap between the bid and the ask. They're directly next to each other, which means that you're not paying any kind of penalty. You can actually still trade Forex currencies through the futures market on the CME exchange. It's called CME FX, and they offer both full size as well as micro size. So I'll talk about that more as we get going. Gordo is asking, does a list exist online that provides the dates when the futures contract change? It's helpful when downloading data. Yes, I'm sure that there is a list somewhere. There have been a lot of different posts on the forum, but I can't think of one off the top of my head that has like an ongoing, continuously updated list. The best thing to do is, again, just Google is your friend. Go back to Google and do a search for futures contract expiration. Okay. And for those that aren't familiar, what Gordo is referring to is that the futures market is traded in the future. Okay, so it means that if we go back one slide, it means that today, January 14th, if I really wanted to, I could actually initiate a trade on the S&P 500 in the front month of, say, December, 2012. So if I have intentions of holding my trade, let's say for the entire year, then that may be something that I would do, is initiate the trade in a distant front month like December. Now, what happens though? Let's say that I initiated a trade today or Monday, and the current contract currently trading for the S&P is actually the March contract. The S&P, the indexes work by quarter. Okay, so March, June. Some of the other instruments like crude, they go monthly, but all the indexes are by quarter. So I initiated a trade today for the S&P 500. That would be the March contract. When the March contract expires, which is going to be the middle of March, when it expires, I need to exit my position. I can't simply hold the March contract position until December. That will not work. People like to joke around that if you initiate a trade in crude oil and you don't close it before the contract expires, that you better clear some room on your driveway because you're going to take physical delivery of a bunch of crude on your driveway. That doesn't really happen. Your broker is going to take care of that for you by forcing you out of the trade. You definitely don't want that to happen because there can be lots of contango and backwardation, which basically is a complex way of saying that as the contract expires in certain markets, there can be some really volatile moves. So you don't want to be holding a position right when it expires. Most of the times, the volume, the daily volume, will switch from the current month to the front month somewhere around the third Friday of the month. It's a general rule. okay? But again, I know Gordo is saying you searched and can't find it. Gordo, if you ask the question in the BMT thread for this webinar, there's a thread that says, where do I start as a trader? Just ask it in that thread, and I'll try to give you some links. Okay. All right, so Forex is the easiest and cheapest in terms of minimum deposit required to open a new account, but Forex is also the riskiest in terms of lack of regulation and the hardest when it comes to finding the best individual bank or broker to do business with. So again, we're going to talk more about this later, talk more about ECNs, non-dealing desk, account sizes, commission, spreads, slippage, etc. Okay, so futures are a bit more complicated to get started with. They also require more money to get started with, for the most part, but they are unquestionably safer in terms of being regulated. You really don't need to spend any kind of time worrying about, you know, one futures broker versus another future broker because they can't trade against you. They can't give you, you know, purposely delayed fills or unfavorable spreads or certain things that the unregulated Forex brokers can do. Okay, so while it's important to do your homework and find a good Forex broker, it's obviously important to do homework with futures brokers too, don't get me wrong, but you don't need to be worried about some unscrupulous behavior because they're regulated, they can't do it. And again, we'll talk more about the account size, commissions, and slippage and all that stuff in the later part of the webinar. Okay, so here are some of the most common questions that I get asked. Which instrument should I trade? Which ones are the best? Which ones are moving, you know, before I go to work? Which ones after I get home? Which ones have the lowest risk? Which ones have the lowest margins? Which ones are the smoothest or have the least amount of chop? The list goes on. Okay, so before I go to the next slide, I'd like to ask you guys, what do you think is the best instrument to trade for a beginner? You know, someone getting started. What's the best instrument to trade? Okay. I'm seeing lots of euro. I'm seeing stocks. Depends on what you're trying to do. Okay, that's a good answer. I see the Dow, the NASDAQ, bonds. Dale says no clue. That's an honest answer. I see Hardy says the dollar. T-notes, bonds. Okay. Baseball cards. There you go. Okay. Well, here's my favorite one. My favorite one to recommend to beginners is the euro. So I will give you my opinion as to why that is. You can, first of all, I trade the euro, so it's not just for beginners. Okay, I trade it personally. But I think it actually is well suited for beginners for a variety of reasons, and here they are. First of all, you can decide, you can trade the euro, and you can decide if you want to do it through Forex or futures, because you can trade it both ways. If you do Forex, it's what's called, you can find brokers that will do what's called micro lot, and basically what that means is that for every position that you initiate, you can do so for as little as 10 cents a pip. Now, in the Forex world, a pip is the smallest increment that price moves, okay? In the futures world, the smallest increment that price moves is called a tick. They are interchangeable. It's the same thing. Forex is pip, futures is tick, okay? So you can start for as little as 10 cents a pip. That's very cheap. I'll show you some examples as to how cheap that is here in a minute. You can also choose a mini size with Forex. That's $1 a pip. You can also do a standard lot in Forex. That's $10 a pip. On the futures side, the CME FX does offer the symbol is M6E, as in micro 6E, and that's $1.25 a tick. So it's 10 times more expensive than the Forex Micro, but roughly the same as the Forex Mini. Okay, so and then there's the standard full-size contract on the futures, which is $12.50 a tick. Okay, so Jordan wants to know, I can't imagine why anyone would trade Forex rather than currency futures. Forex trading cost is higher, which is a negative. Well, I'm giving you some reasons in this webinar that it is appropriate in some cases for some people to trade Forex, mainly based on the starting capital and how much they are willing to risk. And I'm going to give some detailed examples of that in a minute. Gordo wants to know, is pip the same as tick? Yes, in the Forex world, it's called a pip. In the futures world, it's called a tick. They are more or less the same. It's the smallest increment that price can move. Lenny wants to know if the micro 6C has decent volume. In my experience, it is good enough. Okay, again, there's nothing free in the world, right? So let me go back here. So if you're trading this versus this, there is a price to pay. I mean, with the let me see here. What am I doing? Here we go. With this one, there's no slippage. There's no spread. There's very good volume, okay? But it's $12.50 a tick. With this one, depending on the time of day, there is sometimes, like if it's overnight with very light volume, then there can be pretty big spreads, 3, 4, 5, 6 tick spreads, okay? So that means to initiate a trade, sometimes you may spend $6 or $8 just to get in a trade. You're paying not commission, but you're paying the spread, right? But during the cash session, and the euro starts trading 2 a.m., I think it is 2 a.m. Eastern. During the cash session, and from the London Open all the way through the New York Open, it's pretty liquid. The spread is usually quite small, usually 1 tick. So it's not that bad. Just reading some of the questions. Okay. So there's a chart of the euro to give you an example. Okay, here's some other good instruments that I find are very often discussed and traded by some beginner traders on the forum. The Dow, the mini Dow, which is the symbol YM, is $5 a tick. Okay, so it's kind of like a middle ground versus the euro. The NASDAQ, which is the NQ, is $5 a tick. Kind of middle ground as well. The Russell, the TF, is $10 a tick. I see, I'm not so sure. I used to even recommend this myself. I really don't recommend it as much anymore because it's just gotten to, well, you can just see it's really just too expensive for beginners. So if we take some average daily ranges, let me get some water, hang on. All right, if we look at the average daily range, that's how much the market moves on a daily basis, we can see that with the mini Dow, it's moving around 200 points a day recently. So that's about $1,000 per contract, okay? With the NASDAQ, it's about $1,500, and with the Russell, it's $2,500. So as a beginner, your focus should really be on risk and not on how much you should make. So this one down here is moving in terms of dollars 2.5 times more than this one up here. And the mini Dow is moving, I didn't put the average range in here for the euro, sorry, but it's moving in terms of dollars many, many times more than the euro, especially if you choose micro forex or micro futures. Okay, then it's even many times again more. Okay, so here are some NASDAQ and Russell charts. So this is the Dow and NASDAQ, and here's the Russell to give you an idea of the movement. Now, a lot of people say, what about the ES? So the S&P 500, the ES, it's the most liquid instrument traded on the futures market. I hear a lot of people that say, it's very bad because there's too many professionals trading it. And, if you're a beginner, then, you don't want to start off trading against the best of the best of the best. So I hear people saying that. I also hear people say that some methodologies, so depending on what methodology you decide to deploy as a trader, some of them may work better on the ES. And that's the theory anyway, right? Some of those might be market profile or cumulative delta volume as examples. I say that's the theory because, a lot of people are very biased when it comes to deciding if a certain style works. And really, it's not the lines on the chart that are working. It's really just the experience of the trader. That's my belief. So I don't want to get into methodologies too much here, but you will hear that thrown around that certain things work better on the ES. The ES is 1250 a tick. It's 4 ticks and a point. It's just common terminology. Recently, it's been moving about 20 points a day. It's $1,000 a lot. Okay, now it can move a lot more than 20 points. Okay, there have been some days where it's moving 100 points a day. That's $5,000 a lot. So, just in general, about 20 points a day. And here is an ES chart. We take a look at some of the questions. Kaylin wants to know, can you trade the Euro Forex if you have a futures account? The answer is yes. The CME FX is traded on the futures market, and it's the 6E. The symbol is 6E for the euro and M6E for the micro euro. So yes, you can trade the euro on the futures market. Pete says his broker advised against trading the micro. Well, I'm going to show you some examples here at the end of the webinar when we talk about the brokers, and then you can decide. For some people with their account size, you better be trading the micro. If you don't, you're making some mistakes. For other people, they have more money, and therefore the micro is not necessarily the way to go. So we can talk about that more at the end. Is this being recorded? Yes, always, Brad, always. How much do you pay in commissions? Let's save that for the broker section and ask me again. Ward wants to know, do I recommend using demo accounts to start? Well, yeah, without a doubt. However, there are some things to take note of, like always, right? First of all, don't stay on sim forever. Sim forever does more harm than good. Sim or demo or whatever you want to call it is great for learning how your platform works, learning how the instrument trades, learning to read your charts, learning how to place an order, learning how to manage an order, learning how to manage a stop, learning how to do all those things. Okay, sim is the way to do those things. But 2 months later, you should have learned those things already. And if you're just in sim and you're constantly toying around with new indicators and new signals and trying new things and new templates and new combinations of whatever, you are heading down the wrong path. And I don't want to go into that too much on this webinar, but I would suggest that you do not make that mistake. and that you start trading cash as soon as possible. Cash is king. Cash will get your emotions involved. It'll get your psychology involved, and that's really very important to master in order to be a successful trader. And again, this is why I recommend micro in a lot of cases, because when I say cash, you don't have to be risking $500 a trade. That's too much to risk in the beginner, for a beginner. Risk $50 a trade. You risk $5 a trade if you want. I'll give some examples at the end that show how you can do that. So make it cash so that there is some significance there, okay? So you want to act responsibly in your trades, and you don't just randomly click buttons and walk away from your computer, or add to losing positions, or things that you would never do when trading cash. So put some money behind it so you can actually be responsible, but make it very small amounts of money. That's the best way to get started. And the sooner you do that, the better. And then I don't care if you're trading $5 size or $50 size or whatever. Once you have a track record of, say, a month of doing well, then increase your size. Okay, a lot of people want to know about crude, gold, silver, other things like that. Please don't do that. No. I want to sternly tell you, if you do not have years of tax returns, okay, that show that you have been trading profitably, then don't try to trade oil and gold and silver and things like that. They are too volatile for you. They're too expensive for the beginner. I don't care how great they look. I don't care how fast they move. You're focusing on how much money you can make, okay, which is the wrong thing to focus on. Survival is the name of the game when it comes to trading. A lot of you have probably heard the number that 90% of traders fail. Well, survival. If you're still trading a year from now, then you're not one of the 90 that's failed. You've only failed once you quit and walk away, right? So survival is the name of the game. The longer that you survive, the more that you learn. The more that you learn, the more experienced that you are. The more experienced that you are, the better you will trade, and so forth. So don't trade crude and gold and all that kind of stuff as a beginner. I know that there is micro or mini or whatever they call it, crude on the CME. It's not, again, it's not a beginner's instrument, and you do pay a price like everything when you trade in the micro crude, or I think it's called mini crude. When you trade mini crude, you're paying a price in spreads. So it's not a beginner's instrument. If you have been doing well, trading the euro, and you've been doing well trading the mini Dow or whatever for a long period of time, then you want to try trading crude, mini crude, that's fine. But don't jump into it as a beginner. Here's a chart of crude just to give you an idea of how volatile it is. On the last slide, if you didn't catch it, it often moves $3,000 to $6,000 per day. Couple questions here. Pedro wants to know, do I trade Forex or futures on the euro? The answer is yes. I trade both. I have accounts with both Forex and futures firms and trade the euro through both. Sorry, Jeff wants to know what the advantages of trading the ES versus the SPY ETF. Well, when you trade futures, there are tax advantages. There actually are some tax advantages for ETFs also. You'll need to talk to your tax guy about that. I think there's more leverage on the ES, okay, on the future side. So I would almost flip your question over and say, what are the advantages of trading SPY versus the ES? Trading SPY, you have advantages of being able to scale in, 100 shares at a time. And for those that don't know, the SPY ETF and the ES, the S&P 500, they're the same. Okay, one's traded on futures market, one's traded as an ETF in the equities market. So, in a lot of cases, your trading methodology does not call for simply trading with one contract and you're done, right? So if you're scaling in, if you're adding to positions at certain levels or so forth, then the SPY gives you more options to be able to granularly control risk, a little bit at a time, a little bit here, a little bit there, a little bit over there. With the ES, if you're not really prepared, to have it moving, $37 a tick, which it can move 10 ticks in the blink of an eye. So if you're not willing for it to move, $370 in the blink of an eye, then you'd be better served trading the SPY. Okay. Randy wants to know what's my advice on trading gold, the ETF versions of gold. My general advice is you'd probably be better off trading something else as a beginner, because even though you can granularly control position size on the ETF, right down to 100 shares, those 100 shares can still actually get somewhat expensive when you look at a very volatile market like gold. So it's probably better to trade something else until you have a proven track record, feel confident with your method, have months worth of results where you've been profitable. Then you can start trading the ETF of gold. Pete, follow-up question, wants to know that you have to have more in your account to trade the SPY. Yes, if you're day trading the SPY, the ETF, you fall back on that pattern day trader rule that we discussed earlier. That means you have to have $25,000 in your account. Okay, it doesn't mean you have to spend it, but it has to be sitting there thanks to the powers that be. Okay, so yeah, that's definitely a disadvantage if you don't have $25,000 laying around to put into a brokerage account just to be able to day trade SPY 100 shares at a time. Then that's a disadvantage for the ETF without question. Okay, so let's move on just a little bit, and let's talk about another really frequently asked question, and that is, what bar chart do I choose, what size, what type, et cetera, et cetera. So, daily, 4 hour, 1 hour, 5 minute, exotic things like Renko. There's like 20 different variations of Renko charts at this point floating around on the forum, better Renko, hybrid Renko, and all the stuff I don't even know the names of anymore. Point and figure, some older stuff, line break, not very popular, but still around. What about just regular tick or volume charts? Which ones do I choose? Which ones are best? Which ones are smoother? So in general, beginners they make some kind of predictable mistakes. They try to go smaller and smaller and smaller. So maybe they start with a 5 minute chart. Oh, that's moving too much. So then they bring up a 1 minute chart. Oh, that one's not very smooth. It's got a lot of spikes and stuff I can't handle. So now, range charts. Oh, wow. Range charts are really smooth. I can really like this because they're so smooth, right? Nothing is free. Okay, you pay a price in everything that you do, every decision that you make with trading. When you use a range chart to try to smooth things out, first of all, a lot of people don't realize that some of those bars are painting in sub 1 second time. Okay, so in other words, you will blink and there's 5 new bars on the screen. So what does that mean? That means that you had zero opportunity to actually do anything about entering or exiting at that moment. Okay, and unless you're literally going at the bottom of your chart and looking at every single bar's timestamp, you may not realize that when you just bring up a range chart and say, my gosh, this is so pretty, look how smooth it is. You're not going to realize sometimes that these bars are impossible to enter on. In general, I like range charts, but choosing and range charts are not really exotic anymore. Better Renko is kind of an exotic chart, or a hybrid Renko or whatever. Those are exotic charts. If you're gravitating towards these exotic charts, just make sure that you're really doing it for the right reason, which is not necessarily to smooth things out. You don't really want to smooth things out. If you smooth things out too much, then you're missing a lot of really good information. Okay, it's important to see, on a 5 minute bar or a 30 minute bar or a daily bar. It's important to see, a big wick or a big tail on a candle that then, drops back off and we get a small body or whatever. Those things are important to understand: support and resistance, or rejection at certain prices. It's sometimes more difficult to see those things when you're looking at these smoother bar types like Range or Renko. Another really common mistake is that, generally speaking, beginners, they try to just make it smaller and smaller charts, and really the opposite is what you want to be doing. Okay, the beginner says, okay, I just lost $200 on this trade. I'm going to go down on chart size, down to a 133 tick chart or something that moves insanely fast, because I want to get in and out of a trade and I want to have a smaller stop and etc. so I can risk less money. That is the wrong approach. Generally speaking, it's the wrong approach. You end up trading nothing but noise. Really what you want to do is the exact opposite. What you really want to do is trade a bigger chart, okay? So instead of a 5-minute chart, trade a 1-hour chart, instead of a 6-range chart, trade a 24-range chart, or whatever the equivalent is, right? And then reduce your risk based on the instrument that you are trading. So if you're trading the full size euro on the futures market at 12.50 a tick, well, then you could go significantly higher on your time frame, but go down to the micro euro. Okay, so that's 10% of the size of the risk. Okay, hope everybody understands that. It's clear. Again, a lot of beginners, they end up taking a whole bunch of trades with really, really small stops, and they're just trading noise, and they would be far better served if they took less trades with bigger stops and they were actually trading, real solid movement of price in the market from one support and resistance area to another, from one zone to another. And I'll give you a hint. That's not measured in terms of 5 or 10 or 20 ticks. 5, 10, 20 ticks is generally noise. It's just what happens when you got millions of people trading. Okay, what you want to do is place trades around key support and resistance areas, which are, for the most part, 50 ticks apart from each other. Okay. And I'm not going to focus too much on, how to set a stop. That's for a later webinar. But I just want to try to emphasize that your stop is not a function of how much money you can stand to lose. That is not what a stop is for. A stop is when you are wrong. You're long the euro, and at a certain price, your stop, that's when you are willing to admit or whatever word you want to call it. That's when you say, what, this trade is no longer working. That was a mistake, which happens, okay? It's not a mistake. That trade didn't work. That's a better way to put it. That trade didn't work. I need to get out of this trade. That's really what a stop is for, and a stop should be a function of the price action. A stop should be, if price comes back to this level, like prior resistance minus a few ticks, then, I'm sorry, prior support minus a few ticks, then that's not that's not good. That doesn't bode well for my position. I need to be out of this trade. Too many people set a stop because they don't want to lose more than $100 a trade, so they set a 10-tick stop or an 8-tick stop. That's just not the way to do it. So, again, don't simply just, set a 40-tick stop and take $400 stops. It's better to trade on a smaller instrument with a bigger stop. Okay. Hope everyone is clear on that. Anyone have any questions on that before we go to the next slide? Can I recommend a time frame to trade the euro for beginners? Well, I can't, because it's really going to depend on your methodology, your approach. I don't know your method. Some people swing trade, Some people day trade. Some people are funding their account with $100,000. Some people are funding it with $1,000. You know, there's too much to know. But hopefully at the end of this webinar, in another few slides, we're going to start talking about the broker side of things and account sizing. It'll be easier to answer that question. Okay. Another really popular question is time of day. I know that not everyone is a full-time trader. You know, some of you have to work. So my general answer is that there's usually something moving at any time of day. In fact, a lot of times, you know, things move as much or even more overnight than they do during the day, the cash session. So, you know, the thing is that figure out your schedule. You know, when do you have an hour or 2 hours to yourself with no interruptions, no phone ringing, no kids needing to be taken to school or breakfast made, you know, no responsibilities to anyone else. You have your own time. You can close your office door. It's silent. You can focus. You can think. Find that time on your schedule and then just start flipping through charts and find stuff that moves. Generally speaking, there's always something that's moving. You know, luckily in this day and age, we've got global exchanges. So, you know, it doesn't really matter where you are in the world. You can pick another exchange that's probably moving pretty well. Okay, if you decide, you know what, I really just don't have an hour a day, then swing trading might be better suited to that kind of schedule, because with swing trading, you could take, you know, 2 or 3 hours on a weekend, and you could formulate all of your ideas, all of your trades, and, you know, enter them, set them all up in your platform or whatever to be executed Monday morning, and, you know, set your targets and your stops. And really, you don't need to do anything else to them, you know, for the whole week. You can check in on them, you know, during lunch. Hey, how's everything going? Okay, great. But they don't require a lot of maintenance if you set up a swing trade, you know, right, with the low risk. You don't want to be sweating it. You don't want to be in a meeting, you know, at work and going, oh my God, you know, Google just gapped down 20%. You know, you're trading too big if you're having to constantly be monitoring what's going on. So trade a reasonable position size and swing trade if your schedule, you know, doesn't afford more than that. Tracy's asking if I'm a swing trader or a day trader. I typically day trade. I started out swing trading a long time ago. I gotta think now, 15 years ago, I guess, something like that. And I do still swing trade, but for the most part, it is day trading. Okay, so now we're going to start the next section of the presentation, and I'm going to try to talk about brokers. So before I do this, does anybody have any other questions on the instruments? Okay, good. So Andrew's wanting to know, what about options? To be honest, I know next to nothing about options, which is why I'm not going to talk about them because I'm not a good person to talk about options. So I can't help you there, Andrew. I apologize. I need to learn myself when it comes to options. Bob wants to know, are the Euro futures versus the Forex Euro, do they trade at the same time, or are they trading the same? Yes. Generally speaking, the Forex market never closes. It's a 24-hour market, but in the real world, you know, most of the banks that you're going to be dealing with will be closed on Saturday. And they will reopen Sunday afternoon around, I think it's around 5, 6 p.m. New York time, Eastern time. So it's pretty close to a 24-hour market. The futures market is the same way. You know, closes 4:15 New York time opens 6 p.m. Sunday, 4:15 on Friday, and 6 p.m. it opens on Sunday. Okay. So for the most part, you're going to need to decide, am I trading equities, ETFs? Do I want to trade Forex? Do I want to trade futures? You need to know that first before you can pick the best broker. All right. Gordo's asking, is Zenfire down? I'm unable to connect. Zenfire is pretty much always down on the weekend as far as I know. Okay. So you decide first what what you're trading, and then go after the brokers. So I see people starting threads and posts, and they're always asking, who has the lowest commissions, or even worse, who has the best margins or the lowest minimums needed to fund the account. Don't do that, please. That is not a smart way to pick a broker. That's not a smart way to trade. Commissions are important. Do not get me wrong. Commissions are very important. If you add up, how many trades you take in a year and how much you pay in commissions, it's a lot of money, okay? So it is important to get a very good price on commissions, but it is not the end-all, be-all of trading. Usually you can find a very good compromise of both a broker that has low commissions and they're also reliable and reputable and have good support and et cetera. Just to give you an idea on the dollars, if you place 100 trades a month and you find some broker that's 25 cents cheaper a trade, that's going to save you $25. But that's equal to like 2 ticks, right? The ES moves 2 ticks in the blink of an eye. That's your $25. What happens if your broker is down? What happens if you're constantly getting disconnected? What happens if it takes you 5 minutes to get someone on the phone in an emergency? All these things, right? That's going to come back and bite you for a lot more than $25. So you need to weigh them equally. I suggest when you pick the broker, you do some research, find out their reputation on forums and such. Talk to them on the phone. Make sure that they're answering all of your questions. Make sure that you have a good relationship. If they don't have time for you whenever you're opening the account, they're definitely not going to have time for you whenever you have questions after you've opened the account. So, just do some due diligence. Even once you get the demo credentials from a broker, call up the order desk at 2 a.m. and just pretend that you've got a trade on. Just pretend. Tell them your account number. Say, I've got a trade. I need to close it right now. My computer crashed. Let them dig. See how long it takes for them to answer the phone. See how long it takes for them to find you. And then, don't keep them on the hook forever, because you need to tell them this is just demo and they're never going to find it. Okay? All right. So let's move on. When you're trying to determine how much money you need to fund the account with, it's really a function of a few things, but you need to go back to your trading plan and know, what you're doing, how you're trading, what method you're using, swing trading, day trading, etc. So here's some general information. Okay, this is pretty widely accepted general recommendations for position sizing or account sizing. Okay, basically figure out, take an average trade. Whatever you're going to trade, take an average trade and figure out what your stop needs to be on average. Okay, let's say that your stop is going to be 16 ticks on the ES. All right. You need to multiply whatever that number is by 100. Okay, that's, in other words, you want to get 1% risk. Okay, so if you're wrong 20 times in a row, you're not going to blow up your account. This is very important for beginners. Oftentimes, beginners are taking 10% risk per trade. That's insane. Don't do that. So, again, the example is if you're trading a 16 tick stop on average in the ES, that's $200. okay, per one contract in terms of risk. So 100 times that's $20,000 is pretty much a good general idea of what you need to fund the account with, okay? Forget the $5,000 that a lot of brokers let you fund an account with, and forget the $500 margins that you can trade the ES with. None of that stuff matters. That is not to help you, okay? We're going to talk about that more in a second, but that's not to help you. That's not a recommendation that has your best interests, okay? Your best interests are served by using either a 1% or, if you really have to stretch it, a 2% rule, so that you're not risking more than 1 or 2% per trade. Another example is with the euro. If you decide that you're going to trade a 50-tick stop and use a micro forex, it's only 10 cents a pip. This is what I was talking about earlier. This is where it really opens it up to people that don't have a lot of money to invest right now. Because you're only trading $5 per trade, okay? So that's only $500 that you would need to fund the account with, okay? And Marcin, if I'm saying that right, I hope, is asking, is 1% really necessary? What about 2 or 3%? Well, again, there's no hard fast, there's no black and white answer for everything in trading. 1% is a good rule. 2% is acceptable. 3, 4, 5%, you're really pushing it, 6, 7, 8, 10%, that is a mistake. Do not do that. The last example real quick is if you're trading the same euro with a 50-tick stop, but you're trading on the futures market with a CME micro account at $1.25 a tick, now you're risking $62.50 per trade, so you would need to fund with $6,250 to trade one contract and use the 1% risk. These are just guidelines. Okay, anybody have any questions on this before I go to the next slide? Okay. Let's talk about margins. I briefly said don't pay much attention to the margin requirements, all right? Margins are for the broker. Margins are to cover their butt, not yours. All right. So, I know that it's not cool for, you to find a broker that you like that has $1,000 margins on the ES when your friend has a broker that's only $500 margin on the ES. That somehow makes you think your broker is not as good. That's just not the case. That's just not true. And brokers like to compete with each other in terms of intraday margin and try to get lower because, they want your business. And a lot of people, unfortunately, associate lower margins with a way to pick their brokerage, but it's just a mistake. So don't make that mistake. Okay. That said, you do still need to be aware of what the minimum margin requirements are, just so that you don't have any surprises, and get your position closed when you weren't expecting it because you dropped below the minimum margin requirements. Okay, so again, we're talking about brokers. So if you're selecting a futures broker, again, the market is very regulated. It's very fair. You don't really need to worry about broker A giving you worse fills than broker B, or broker C having more slippage than broker A. That for the most part does not happen. There are some very limited cases where you may see some discrepancies, but for the most part, the way the system is set up, that does not happen. Okay. If you select Forex, though, on the other hand, you really do need to do your homework. You don't want to be scared off. Just be prepared to do the homework. Do business with a non-dealing desk broker. That means that they don't get involved on the trade. They're not working the trade against you. There are Forex firms that do what they call, they have like these liquidity providers. I've seen that terminology used, which is basically multiple banks, and they aggregate all of these banks, and to the best possible bid and ask. So if the bank of XYZ is willing to quote the euro at 120, and the bank of ABC is quoting it at 125, they're going to give you whichever one is the best quote, the lowest bid, the best ask. Okay, so you can find that with Forex, where they're aggregating from multiple providers into one. Some Forex firms don't charge a commission. They say that there's no commission. But again, nothing's free, right? Nothing's free. So usually what happens is they either automatically add 1 pip to whatever you're being quoted. So you're paying, in essence, a 1 pip spread. Or in some cases, the more, I don't want to call them shady, but the different kinds of Forex brokers out there, they don't have a commission, but they're basically sticking it to you with wide spreads. So, one way or another, they're going to make money off of your transaction. Okay? That doesn't mean that you should run away from Forex. Forex is good for beginners that need to fund their account with less money or that want to trade bigger time frames with less money. Forex is good. If you until you get the minimum amount of money needed to do the same in a futures micro account, Forex is really a good place to start. A lot of people never move away from Forex. They say Forex is the only way to go, okay, because of liquidity and etc. So don't be afraid of Forex. Just do your homework. I'm getting questions. Bob wants to know what the overnight margin is on the ES, or what is it based on? Bob, talk to your broker, but generally, if you open a position during the cash session, that will use your intraday margin. If you want to hold that position past the cash close, so 4:15 Eastern, then you will need to have enough money for overnight margin in your account. If you do not, then one of two things, and the overnight margin is significantly higher. Overnight margin is dictated by the exchange itself, by the CME. It's not controlled by the broker. The broker controls the intraday margins. The exchange controls the overnight margins. So if you don't have enough money in the account to hold a trade overnight, then one of two things will happen. The broker will either give you a margin call, or they will just more likely just close your position at the end of the trading session. Okay. Lenny wants to know what are intraday trading times for the 6E. Generally speaking, 2 a.m. Eastern to 10 or 11 a.m. Eastern. That's the London Open through the New York Open and a little bit extra. It's usually moving very well. For the exact times of open outcry and etc., you can just go to the CME website. It's cmegroup.com, and then you can click on the 6E. It's up there on the menu somewhere. And they have a contract specifications for all of their contracts, and you can see all the detailed information. Jay wants to know if I have a list of non-dealing desk brokers on the forum. I do not. But Jay, you're more than welcome to start a thread and ask that question. Wayne wants to know which broker I use. Everyone hopefully saw my disclaimer at the beginning where I'm trying to be very fair. So just because I use a certain broker doesn't mean that it's good for you. I use MB Trading, I use FXCM, I use Interactive Brokers, and I use Velocity Futures. Okay, let's talk about location. So I know a lot of you, probably about half of you or so, are outside of the United States. If you're outside the U.S., then first of all, there are some brokerages, this is more on the future side, there are some brokerages that simply won't allow you to open an account due to strict regulations or demands from their accounting department, or in some cases, your country is blacklisted with the United States. So you need to check. It's not a hard, fast rule. It's not like every single broker does not allow X. So you're going to have to just check with your your broker to see if they will open an account in your country. With Forex, that's not an issue really. If you're outside the U.S., you also have a bit of an issue in terms of location with latency, the amount of time it takes for your trade once you click the button for your trade to make its way through the interweb and reach either the gateway server or even then beyond that, the exchange itself. So you should ask your broker if they have a locally or at least on the same continent gateway server, to help you speed up transactions. Okay, most of the bigger firms do have some type of a gateway server, like over in Europe, to help speed up transactions for the guys over there. Support is also an issue. Clearly you want to make sure you can get a hold of somebody whenever the time of day you're trading. Again, most big firms, they have 24-hour order desk, but don't just say 24-hour. That's good enough. Make sure that when you call, that you're not getting put on hold for 30 minutes, because that's not going to do you a whole lot of good. So I would suggest testing it out before you open the account, or before you fund the account, at least. Okay, I'm seeing a couple questions here. Yes, the webinar is being recorded. Okay, I'm going to skip the rest of those. Let's talk about data and platforms. So, when you're choosing a broker, you really should probably know what platform you intend to use before you choose the broker. Now, broker is important, don't get me wrong, but I really think that the platform is probably more important. You're probably less willing to use a foreign platform that you're not familiar with than you are just to choose another broker that's compatible with the platform of your choice. So if you decide on whatever platform you want to use, and we're going to talk all about platforms in another webinar in the future. If you decide on a platform that you want to use, then you start approaching brokers that support that platform. You should also keep in mind that brokers are really there to execute your orders, and they're not so much there to give you data, to give you quotes, to give you backfill, historical data, especially if you're doing some more of the exotic stuff with like cumulative delta volume and you need historical bid and ask data. You're very unlikely to get that information from your broker, from their data feed. Now, in some cases, the trading platform that you use will actually be giving you the historical data, the backfill. The platform itself has taken on the responsibility of serving its users the data. Okay. You can find some platforms that do that by searching or asking in the thread. We'll also discuss it in detail in the next webinar. Now, if you choose a platform that does not do that, or you just want data from a third party that you can know is 100% reliable or the best, there are several good choices out there that you can get data from that are compatible with pretty much any platform, and will let you get the best of both worlds. You get the best data, the best backfill, the best platform that you wanted, and the broker that you wanted. So it really opens up your options. But it does, it's not free. If you're paying for those third-party data providers, you may be paying $50 or $100 a month in some cases. Although, be sure and ask the data provider about exchange fee waivers, because the exchange will allow them to give you a significant discount by waiving all the fees in many cases. Okay, anybody have questions before I go to the next slide? All right, Jeff wants to know if there's any disadvantages of using just one broker. Well, I mean, if that broker is, let's take the MF Global catastrophe, disaster, black swan event, worst case scenario, etc. Okay, that's a good example. It's recent in everyone's mind. If your only account was with MF Global, then you were not a happy camper. And it would depend on just how unhappy you were based on what was happening. Were you in a position? Were you unable to exit a position? Were you unable to hedge? Were you unable to withdraw your money? Whatever. So in those cases, having a second broker can definitely be an asset. Not everyone is in a position to be able to fund two different broker accounts, though. So it just depends. It just depends on how serious you are about trading, how much of a career this is versus a hobby, etc. And I don't want to scare anybody off because the MF Global thing is really, that is a black swan type of an event. It is very rare, but obviously if you're caught up in it when it happens, then it's a disaster. But for the most part, you don't have to worry about it. William wants to know, how much is it to lease a server? So we will talk about a lot more of that, and I think it was part 6 of the webinars. I'm going to be talking about, part of it's going to be talking about algorithmic trading. So if you're doing that, then it's probably to your advantage to lease a server in a data center that is very near your FCM or your gateway server, your broker's server, to reduce latency and get you better fills. In some cases, even if you're not using an automated trading system, if you're just trading manually, if you're just discretionary trading, then it's really to your advantage to lease a server somewhere. Personally, I lease a server in Chicago right next to the CME order servers. It's not in the same data center because I don't want to spend $5,000 a month. It's like 3 miles away, and I spend $100 a month. Okay, and the reason I do it is not because I want to run an automated strategy with lower latency. I do it because I like being able to have a centralized place that's just my trading, whereas my home desktop machine is kind of a catch-all, do-all type machine. So I like being able to remote over to that server. It never goes down. I never have any problems with it. So hope that answers your question. Is there a difference between Zenfire and Rithmic? Bob wants to know. Yes, there is a difference. They are sisters. Rithmic is the big brother, I guess you could say. Maybe they're brothers. Rithmic is the big brother. Zenfire was born from Rithmic. It was spun off, and Mirus owns the Zenfire brand. Mirus has since taken and done some things with Zenfire to make it more unique and more their own. So they are very similar in 95% of the ways, and a little bit different based on those things that Mirus has done. Jesus wants to know, is there a spread on the bid and ask on the micro futures, and how bad is it? We talked briefly about that. There is a spread at certain times of the day, but during the cash session, generally speaking, the spread is very low, 1 tick for the most part. But it can vary. If you're trading around news events, which you should not be doing, if you're trading around news events, you can literally see, because the volume is less on the micro, you can literally see the liquidity dry up as all these bots and stuff pull their orders out of the system. And in that case, you're going to have some really big 6, 10, 12 tick spreads, like 30 seconds before a major news announcement, like ADP payroll or something. Okay, but for the most part, cash hours trading, 1 tick spread you will find in the micros. Kevin wants to know if brokers provide their own platforms. Yes, actually, there are a number of brokers that do provide their own platforms. I don't want to criticize them too much, but generally speaking, that is exactly what it sounds like. That is a broker who has made a platform also. You know, most of you are probably happier with a platform that's actually produced by someone that is an expert at producing a platform. You know, they're not an expert at being a broker, they're an expert at producing a platform. So take that platform and then go find somebody that's an expert at being a broker and put the two together. That'll generally give you a better result. Okay, so there's several more questions, and before I answer the rest of them, we are on the last slide. This is it. So let me just go over this real quick and say that there are many more parts to come of this particular series, Where to Start as a Trader. Also, you can see all the other events coming up in the next few weeks. I know we talked a lot about Forex and futures in this webinar, so I want to say that there's going to be a Forex expert coming in the next 2 or 3 weeks that will hold a webinar to really dive in a lot more detail about Forex versus futures. So that'll be coming. All right, guys, so if anybody has any other questions, now is the time to ask. Gordo wants to know what the MF Global event was. Gordo, you can just do a search on Google, but briefly, they were a very large broker, very large, that in a very short order went bankrupt and misappropriated some customer funds and used customer funds for their own trading that the traders did not realize that was what was happening, and now that they went bye-bye and bankrupt, $1.2 billion of those funds are missing conveniently, so it's a big ordeal. They've recovered about $600 million so far, and they're still doing investigations. Very, very rare, and there will be no doubt tighter regulations coming in light of what has happened with MF Global. Mike wants to know what platform I use with MB Trading. I'm actually using their, whatever it's called, Desktop Pro for those trades. Dale wants to know about managed accounts and trading alongside someone more experienced. Well, I don't want to go too far off topic, but very briefly, if you're one of those people who are just trying to find some other, you know, can I find a system that just makes 2 points a day? Can I find a set of indicators that, you know, tell me when to enter a trade or when to exit a trade? Can I find a trading room that, you know, gives me calls? If you're one of those people that is looking for someone to tell you what to do, then my general advice is don't do that. Instead, give your money to a professional investor, you know, retirement fund manager, etc. If you want to be a trader, you need to learn to trade, and for the most part, that doesn't involve, you know, holy grails and trading room call services and that kind of stuff. That's not learning to trade. That's learning to listen to someone else. Can I share the name of the server company that I use? Yes, I use Steadfast, but I would like to invite you guys to contact Sam028 on the forum, Sam028 on the forum, because he has virtual private servers set up for people just on the forum, just on VMT, is giving everybody a really good price. It's much less expensive than what I pay for my servers. So I recommend doing that. Sam wants to know who's a good data provider for market internals like tick, trend, etc. I recommend IQ Feed, DTN IQ Feed for that. George wants to know if I would mention some platforms that I recommend for Forex. I will just mention a few platforms in general that will work just fine for Forex. And that would be NinjaTrader, Multicharts, and Sierra Chart. There are many, many more. What you need to do is just check with your broker to see if they support the platform. Is this webinar being recorded? Yes, it is, and I will post it probably sometime tomorrow. Jennifer's asking a question about a specific broker. Jennifer, just do a search on BMT and you will find many threads on all the main brokers, and you'll get feedback from people that have used them and get a sense of, you know, how people feel about them. Do I know the topic of the upcoming webinars? Yes, I do. Generally speaking, it'll be something like that. Pete, about your question, trading at the open, you'll need to ask it again. I'm sorry, it's long gone on my screen. Martin wants to know what the average profit of a professional trader is. How much money does a professional trader earn? Well, I mean, okay, let me tell you this. First of all, I used to think, and I was wrong, I used to think that, you know, if you're making money trading, then why don't you, I called it adding a zero. Why don't you just add a zero? And if you're trading one contract, why don't you just trade 10? If you're trading 10, why don't you just trade 100? Well, it's not that simple now that I've, you know, been doing it a while. Even for people that are profitable, it's not as simple as simply doubling or tripling or whatever your position size, because there is more to trading than black and white enter exit stuff. It's a lot to do with psychology. It's very mental. So, you know, it's not as easy as you think to be risking $5,000 a trade. You know, it's all relative, you know, to your net worth. You know, some people think $5,000 a trade is nothing. So for you, then it's not easy to risk, you know, $50,000 a trade or whatever is relative, you know, for your net worth. But generally speaking, a good trader should earn a good living, and you know, it's a lot of work, so you should be paid well for doing it. All right, there's a lot of questions coming in. Am I having webinars every weekend? Well, we're having webinars. We generally have them every week, and there's the most recent schedule. I haven't written the webinars yet for part 2 of this series. As soon as I get a better idea of that, I'll put it on the schedule. Gordo says, I guess I know what MF stands for. Yeah, that's probably pretty accurate. Will you post a list of platforms and brokers that I know are excellent? Well, I'll tell you the ones that I use. And again, I will tell you that this does not mean that they're the best for you. I use Velocity Futures. I use FXCM, MB Trading, and Interactive Brokers. For platforms, I have used NinjaTrader, Multicharts, and Sierra Chart. So I like all those guys, but you should do your own research and find which one's going to be best for you. There are many others. Just because I didn't name someone does not mean that they're not any good by any means. I just, you know, I have enough accounts. I don't need any more. By the way, there is the BMT Best of Trading, and today's actually the last day to vote for the Best of Trading 2011. So that's going to be a really great place to give you a bigger sense, more than just my opinion, of what people are using and how they prioritize things. So wait for those results in the coming days, and you'll see what people think are the best platforms and brokers and a whole bunch of other things. There's 12 categories this year. What's the name of the company for the $100 server? I said that already. Can I elaborate on my server? I did already, I think. What about TradeStation? Sure. A lot of people use TradeStation. Are there any platforms that can be used on a Mac? Let's save those questions for the platform webinar. When I say do homework on looking for brokers, can I give more details? If you go on BMT to the broker and data feeds section, I think there's some sticky threads at the top that talk about this, and one of them gives you a link or multiple links on how to investigate any complaints or whatnot with certain brokers. It's a good place to start. You can see which brokers are being actively talked about on the forum. You can see which ones are winning the awards for the BMT Best of Trading. You can type them in to BMT search and read a bunch of threads, do some Google searches. That's all good places to start. One of my favorite indicators, we'll save that for another webinar. Apart from IB, Interactive Brokers, which other futures brokers can be considered the best for retail? I've given you some examples. Commissions. Yeah, I said that I would do that, so let me pull up. So here's an approximate commissions for the Euro futures full-size contract. About $4.50 to $4.75, maybe $5 a round turn, depending on your broker. And then let's do the same thing for the micro futures. It's going to be about $1.75 to $2, something like that. Okay. Is PFG Best a well-known broker? Yes, they are. They were a nominee in our Best of Trading. We'll see how the voting looks when it's all done at the end of today. My opinion on starting trading in the evening in the U.S. and then relying on lower volatility with fewer inflection points to trade against. Generally speaking, there is sufficient volume overnight, and the market moves pretty well. So I think that if the only time of day that you can trade is overnight, that you shouldn't be afraid to go ahead and do that. Now, if you find that trading overnight, if you're in the U.S. trading overnight, trading U.S. futures, if that doesn't work well for you, then try trading, London or Tokyo or whatever, something that may be cash, during their time of day, but it's overnight for you. I'm skipping questions about indicators. That'll be a future webinar. The dates on the upcoming webinars, I don't have dates for the continuation of this series yet. All I have are dates for the other webinars. You can find this on the BMT homepage. Which brokers provide virtual private servers in proximity of the exchange? Most of the big ones do. However, they're usually very expensive. So this is only, you know, 1,000 to 3,000 a month. This is only an option if you are already profitable and you're algorithmic trading and you really need that. For the most part, you will be just fine finding servers that are in and around the exchange or nearby your broker. Like I said, the one that I'm using, and I think the one that Sam is using as well, is only like 2 or 3 miles from the exchange. So the latency is virtually nothing. It's dark fiber running underground, so it's far less than 1 millisecond, and it's you know, actually affordable. You know, 50 bucks a month, let's say. You have to talk to Sam on the forum, Sam 028028, for his pricing. Let's see, lots of server questions I've already answered, I hope. Okay, if I've skipped any of your questions, it's because I really don't want to get into it for this webinar. We'll save it for a future webinar. RD wants to know the recommended FX brokers. I've named a few. Again, refer back to the BMT Best of Trading. You know, that's the whole point of that. You can find that by going to BMT, and then on the navigation bar, click Community, and then Best of Trading. And that is where the users nominate their brokers, their platforms, their data feeds, their favorite indicators, favorite trading books, whatever, and then we vote on them. And that voting is taking place right now. Today's the last day for 2011. How do I find time to run the forum? That's a good question. I don't sleep. Okay. Hopefully I've got just about everybody's questions answered. The name of my host is Steadfast. I'll say that again. All right, guys. Looks like everybody has their questions answered. If you do have any other follow-up questions, then there is a thread for this webinar for the entire series, where to start as a trader. You can find a link to it on the BMT homepage in the upcoming events. It's still listed there right now. You can go to that thread, type in your question. We'll try to get answers for you. In that thread, I will be posting the recording, the link for the recording, probably sometime tomorrow. All right, guys. I'll see everybody on the forum and hope everybody has a good weekend.